Welcome. Thank you all for joining. My name is Nicole Carlson. I am the Director of Strategic Partnerships at LinkUp. For those of you who may not be familiar with LinkUp, we are the industry leader in delivering accurate, real-time, and predictive global job market data. Through custom technology, we index millions of job listings directly from employer websites daily. Using this unique sourcing methodology, we've built the highest quality database of nearly 200 million global job listings from over 60,000 companies. I am pleased to be here today with LinkUp CEO, Toby Dayton, along with Reed Stedman, who is Managing Director and Global Head of ESG and Innovation at S&P Dow Jones Indices, and Zach Botzenhart, Associate Director, Strategy Indices at S&P DJI. The format for today's webinar will be roughly 30 minutes of content and discussion and about 15 minutes for dedicated Q&A at the end. Please drop questions into the Q&A chat box at the bottom right of your screen as we go along. And now it's my pleasure to turn it over to Reed to kick things off and discuss our partnership and the work we're doing together.
Thanks, Nicole. As Nicole mentioned, my name is Reed Stedman, and I oversee ESG and innovation at S&P Dow Jones Indices. At S&P Dow Jones, we offer many iconic indices that you know well, like the S&P 500 and the Dow Jones Industrial Average. These indices continue to be highly relevant and interesting to the market, and they're going to be here for 100 years to come and beyond. But we also see a great need for indices beyond these icons that provide more actionable information to investors. Some people may not know that our second most popular index behind the S&P 500 in terms of number of people accessing our website and mentions in the press is an economic index, the S&P CoreLogic Home Price Index. When we launched this index a good number of years ago, our servers would actually shut down because so many people were coming to our website to get the latest index level. We thankfully fixed that problem, but the interest remains absolutely huge, and there's huge demand generally for these types of less conventional, innovative indices based on alternative data sets. And in light of this, we proudly partnered with LinkUp a few years back to launch a new economic index focused on jobs, the S&P 500 LinkUp Jobs Index, which we think will rise to the same status as our other economic indices, like our home price indices. This webinar is a chance for you to learn more about this index and the terrific data from LinkUp that underlies it. And with this, I'd like to pass the mic to LinkUp CEO, Toby.
Thanks, Reed, and thanks everyone for joining us. We're looking forward to walking you through our job market data and talk a little bit about what we're seeing in the current environment, which is certainly, as everyone knows, been really unprecedented through this pandemic and the recovery since. So we're excited about that and looking forward to introducing you to the S&P 500 LinkUp Jobs Index as well. Before we jump into the data, I just want to touch on a little bit deeper in what Nicole said about the sort of background of our data, give you a little bit more context there on where we're sourcing our data from. As Nicole said, we are the global leader in delivering job market data to the capital markets, and we've got a very unique and powerful data set, and very unique in that we are only indexing jobs directly from company websites globally. So we do not aggregate jobs from other job boards, other third-party sources. We go directly to the employer websites themselves, and we're scraping millions and millions of jobs every day directly from tens of thousands of companies around the world. And so what that does is gives us essentially a very, very real-time, highly accurate and very granular look at what's going on in the labor market from a demand standpoint. And we've developed a range of data solutions that allow us and our clients to leverage the very significant and powerful signals that are inherent in that data. And that's really, I think, two key things about our data, I think, that really set it apart and create a very strong data product for our clients. The first is that the data is very predictive. So if you think about when a company is posting a job, opening on their website, that is a very significant signal that they intend to fill that position with a hire. So there's a very forward-looking nature to the data. It's very correlated to job growth in future periods. So there are some very powerful predictive attributes to the data itself. The second thing that's really, really compelling about our data is that job openings really provide a huge window into what's going on in a business. They essentially allow people to understand not only how many jobs they want to fill and how many hires they're trying to make, but what those titles are, what the descriptions are, what those people will be doing once they're employed by the company. You can get a sense of what the roles are, where those companies are making investments, what their strategies are, product development, growth initiatives. All kinds of signals are inherent in what companies are doing and where they're seeing their businesses going forward. So again, that's really the power of the data that is really drives the value proposition around LinkUp and the data set. So with that, we'll jump into some of the data itself and what we're seeing. And I'll run through a handful of slides that really give a sense of what the labor market has looked like since the pandemic began in early 2020. And not surprisingly, it's been really just an extraordinary set of circumstances since the pandemic hit in March of 2020. And all of these slides that I'll walk through sort of have different angles of the same types of themes that we're seeing, and really, from the early days in March and April, when essentially the economy shut down and 20 million jobs were lost. It's taken about 2 years to recover all of those jobs. The recovery has been, I think, vastly exceeded what people's expectations were early on in the pandemic. So it's really been an extraordinary period of time, and certainly, the closest comparison we have is to the Great Recession from following 2008, 2009, sort of in that time period in the jobless recovery, which took about 5-6 years to recover those jobs. So this has certainly been much more accelerated from since that time. So when we look at essentially the past 2 years, oh wait, sorry, Nicole, can you back up one? When you look at these slides, essentially, I think what we would do is we sort of divide it up into 3 periods. The first is 2020. You can see the decline in total job listings, the blue line, when labor demand really dropped by about 30%. Took most of 2020 through the chaos of the country and the economies and businesses trying to sort of figure out how to recover from that and sort of adapt to really, again, an extraordinary set of circumstances. But labor demand did start bouncing back that summer, and you can see that essentially by the end of 2020, labor demand was pretty much where it was before. And then as vaccinations were developed and rolled out, you can see the very significant growth in labor demand through 2021. Again, really the power of the job creation, the recovery since then has really been very, very strong. And then the third period is sort of the last 6 months from about September on. The job market has really cooled off quite a bit as I think a lot of circumstances have really created a pretty complex set of circumstances. You've got variants, Omicron, wage inflation, the Great Resignation, lots of talk of inflation and Fed policy response to that, now war in Ukraine. So there's a lot of uncertainty and talk even now of sort of likelihood of a recession in front of us. So things have become quite uncertain as we look forward, and that you can see that in the data that labor demand has really cooled off. There's a little bit of a hint of some positivity in our March data. You can see a pretty steep increase there on the right in new jobs in the green bar, and an uptick in total job openings. So there at least are some glimmers of optimism as we look towards the spring and continued growth in the job market. So one of the things that we do, in addition to scraping jobs directly from company websites, once we have those job listings, we map our data to a variety of identifiers and other third-party data. So we've got, on the identifier side, we map to tickers with FactSet, CDOL, ISIN, QSIP, so that again, our clients can make use of the data in their investment strategies. We also map it to industries, sectors. We map it to occupations using the ONET taxonomy. So you can really get a sense of sort of what's happening in different parts of the economy. And that's been one of the things we've really been focused on in the recovery from COVID, is looking at, in particular, the growth in labor demand in the manufacturing side of the economy versus services. And it's been really interesting to watch the differences between those two, again, as the economy has opened up and businesses have started to recover. But essentially, the takeaway here is that the manufacturing, the rate of labor demand has grown at about 2 times that of services industries. And we've normalized this slide and indexed it to 100 because services industries is about 7 times as large as manufacturing. So we've indexed this to 100, but you can see that labor demand has grown on the manufacturing side quite a bit in excess of services. The other thing we've been tracking really significantly, very aggressively through the pandemic. It's been fascinating to watch from a geographic standpoint through the pandemic and in the recovery, as states have had adopted really a wide range of responses to the pandemic and mask policies and vaccinations, vaccination rates. There's been really an interesting set of circumstances. So we've been tracking labor demand and growth and recovery at a state level with a lot of fascination. And here we're looking at new job openings just this year. So through the first quarter, and as I mentioned earlier, most of the job gains this year in terms of growth of labor demand have really taken place in March, but new job listings are up 27% across the US, but there's really a wide dispersion. So we've ranked these by decile and color-coded them. And on average, the top decile new job listings have grown by about 60%, on the bottom decile just about 10%. So again, wide range of changes there in new job openings. One of the other metrics that we track is what we call job duration. And in addition to all of the other data, one of the things that we look at is when jobs are actually posted. So we know exactly when a company posts a job, we know when it is taken down, and essentially we measure here the average number of days across the entire economy. And you can get a sense of the hiring velocity in the labor market. And on average, over the last 10 years or so, companies typically are posting jobs for about 45 days. So on average, it takes about 45 days for companies to post a job, go through the interview process, and make a hire. And you can see that once, when COVID hit, hiring really did slow down. It rose up to 50 days. So velocity decreased. As the economy opened up, it accelerated again dramatically, and it was averaged about 40 days for most of 2021, and then again has slowed down since, as we talked about in Q1. And lastly, just a couple of two other slides, two other metrics as we segue into the S&P 500 LinkUp Jobs Index. On the left is the LinkUp 10,000, which we created essentially as a way to normalize our data. So we're always constantly adding new companies to the index. So to normalize that, we essentially created a macro index that tracks the total aggregate job listings for the 10,000 global employers with the most job openings in the US. You could see the same trends there that we've been talking about. And then on the right is the S&P 500 index, which again follows that very same type of pattern. So with that, I'll turn things over to Zach to drill into the S&P 500 LinkUp Jobs Index.
Hi everyone, I'm Zach Botzenhart. As Nicole said, I'm one of the associate directors that cover thematic indices within S&P Dow Jones. Today we're going to cover S&P 500 LinkUp Job Indices. What are these indices? As Reed stated, these indices are economic indicators of labor demand. The purpose of these indices is to be able to provide new insights to the S&P 500 or even at macro trends in the US or global markets. A really great benefit of these indices is that they are updated weekly and designed to measure changes in the global listings posted by companies in the S&P 500 and its individual sectors. Being updated weekly is really unique for jobs-related economic indicators. The reason why it's unique is that most government agencies or bureaus are posting backward-looking data, as they're mostly publishing what happened in the previous month. With these indices, we're capturing, as Toby stated, a forward-looking index, because this is the planning, this is the hiring that companies are planning to do. So it creates a really unique signal in the market. How we actually calculate these indices is relatively straightforward. It's a simple calculation of the job count of the companies in the S&P 500. We weight those individual companies, and then we create a divisor used to ensure that the changes in the constituents do not result in large or discrete changes in the index values. It's relatively straightforward. We publish these files every single week with a 1 week lag from when LinkUp collects the data. Again, this 1 week lag creates a really unique economic indicator when compared to, say, the Bureau of Labor Statistics, which publishes monthly, but it's 3 weeks after the reference period. And so when you have access to these indices and the underlying data, you can create a unique signal for the market, but you can also judge what's going on in the economy as well from these. Now, what we're seeing with the performance against the flagship benchmark that is compared to the S&P 500, when we finally overlay the data on the S&P 500, which from one of Toby's previous slides from the LinkUp 10,000, it's about 15% of all jobs posted in the LinkUp 10,000. What we can see is relatively good performance against the benchmark coming out of COVID. To this echoes what Toby and LinkUp data is trying to relate to. It's trying to create a forward-looking data set. We can see that the S&P 500 is performing well in this time span, but when you overlay our jobs weighted methodology, it equally performs or even outperforms depending on the time span that you're looking for. Now I'm going to pass it back to Toby so he can drill into the jobs data that LinkUp has seen for the past couple of years based on sectors.
Thanks, Zach. So picking up on that a little bit, the index itself is pegged to 100 starting in September of 2016. But one of the aspects of an index is that you can essentially look at it from any time period. So here we're looking at the performance of the index itself and then the underlying sectors underneath that in 2 time periods. One since January of 2020. Pre-COVID, and then the other on the right since January 2021. So on the left, you can see that all sectors within the S&P dropped, not surprisingly, in the pandemic as it hit, and essentially took again about a year to get back to their pre-COVID levels, and then have really risen since then. Since since January of 2020, the index itself is up about 85%, and materials and information technology have led the way, both up about 190%. And then on the right, looking at since January of 2021, the index is up about 65%, with energy and financials leading the way, and utilities up there as well. But again, very, very strong recovery since that, and a strong performance in almost all sectors. On the right too, I think of note is that consumer discretionary and consumer staples really are lagging behind the other sectors there. And again, I'll turn things back to Zach to drill into the energy and financials a little bit more. Oh, sorry, I've got one more slide. Then here we've got since 2022. Again, you can see the performance there. The index is up about 6% this year, with, again, energy and financials and utilities leading the way. The pie chart on the right does show, as Zach mentioned, it's a jobs weighted index. And so you can see the employment by category, which consumer discretionary from an employment standpoint is by far and away the largest sector from a job standpoint, followed by the others you can see there. But again, pretty wide range there of actually by employee count, by company size, from an employee standpoint, job openings is relevant there for an overall standpoint. So with that, again, I'll turn things back to Zach to drill into energy and financials a little bit more deeply.
Yeah, so what sectors are performing? So as Toby stated, it's a job weighted index. We look at the overall composite of the S&P 500, but we break it down into the 11 GIC sectors. So what we notice while actually decomposing it into what sectors are performing quite well, we saw that energy, as we've all seen this year, has been performing extremely well as its own benchmark. But when we overlay the LinkUp data and the jobs weighted methodology on top of it, we're not only going to get equal performance, relatively to this quarterly return, but when you break it out to the 1 year and 3 year return, we're seeing even better performance when you compare it to the benchmark. And then we can also see a strong correlation within the financial sectors, that they have about 10% of all the job openings in the S&P 500 LinkUp index. And both the benchmark and the LinkUp index are performing extremely well. But what this index is showing in the financial sectors is that this economic indicator is saying that the financials, based off of our methodology, is performing quite well based off of the future hiring that they have planned for this year. Now, where we think that you're going to be able to see some hidden performance with this data is not only when you look at it from a macro level, but when you look at it from a micro level as well. So when we look at two S&P 500 sectors that haven't performed recently well in the past quarter, or relative time spans that we're looking at, when using the LinkUp data as an overlay, you're able to generate some performance that is better than the benchmark. But that's just because of our jobs weighted methodology. We're looking at the future growth that the company is planning to do with their job count. If someone has access to the constituent file, they would be able to either recreate this economic indicator or parse out the top performing companies in these sectors that may be performing better in these individual sectors. It's a really great way to look at this, because we do have that data available weekly. Now I'm going to pass it back to Toby, because we found some really cool companies in these two sectors and some other and another sector as well that's going to validate where we think this hidden performance can be found.
Thanks, Zach. And as Zach mentioned, one of the interesting uses of this data is obviously drilling into specific companies and particularly relative to their peer group and benchmarks in and around their sectors. So there are the data itself is obviously based on the fundamental job openings data at a company level, and we roll that up and have created the indices from that. So again, there's a lot of very, very significant, powerful use cases for analyzing and better understanding company performance on both the positive side and on the negative side. So we'll cover a couple of the stories here. But again, I think there are a ton of really compelling stories over the last 2 years as companies adapted to the pandemic and really in some cases, and we'll highlight two, have fundamentally transformed their business and strategies around that. And you can see that in the way that they have started to shift their hiring patterns to execute against those strategic shifts. So the first of those that we'll touch on is MGM. And obviously the pandemic hit the hospitality and leisure sector very aggressively, and as travel was shut down, and essentially that was arguably one of the hardest hit industries, certainly in the economy, and in particular Las Vegas, which was certainly maybe the most dependent on that sector, was decimated. So not surprisingly, you saw massive job drops in companies there in the leisure, hospitality, casino in particular. But interestingly, you can see in MGM, they responded very, very quickly with very aggressive hiring in technology positions. So again, you can look at and understand exactly where companies are hiring, the kinds of positions they're hiring for, and saw almost immediately MGM really started to invest heavily in its iGaming strategies, hiring a range of positions around technology, software development, web development, mobile, all kinds of things in and around that strategy of its iGaming and BetMGM strategy. And you can see that in the data. So we'll leave it up to the analysts and the investors to figure out the sort of investment theme around that. But what's of note from our standpoint is that the data itself provided an indicator of where their business was heading and what they were doing to invest in a very significant strategic effort around their business. Similarly with Iron Mountain, it's sort of the same story, maybe not quite as pandemic driven, but Iron Mountain, which is a document storage company, really started to make an aggressive shift. You can see again in 2020, moving from sort of storage of physical files and documents to digital digitization and digital storage and cloud services for its clients. And again, you can see in 2020 the dramatic shift in hiring there, and the corresponding decline in some of their more traditional transportation material moving occupations hires. So as that fell down, the hiring increased in the technology-based ones, and again, very much indicative of and a leading indicator of that shift in their strategies in that direction. So again, just two snapshot stories of that highlight, I think, the predictive power and the insights that you can glean from hiring patterns in and around specific companies, and then rolling that up into sector analysis, geographic, and all the way up to macro. So with that, we will open it up for Q&A, and happy to take any questions. If people have any questions on any aspect of the data or the S&P 500 LinkUp Jobs Index, we'll open it up for questions.
Yeah, thank you all. That was super enlightening. As Kubi said, if you have any questions, feel free to drop them in the Q&A chat at the bottom right of your screen. And we have a few that came in, so I'll kick things off with those. Taking it back to the beginning, and Toby, maybe you can take this one. How did the idea of this index first come into fruition?
So it is going back quite a bit, as Reed mentioned at the outset. It was quite a number of years ago that we started talking to the team at S&P and Reed and the innovation and R&D group within S&P. And we started talking about the power of our data as we were starting to emerge in the alternative data space. We started talking to Reed and his team. And as Reed mentioned, they had fantastic success with Case-Shiller index, and we're looking for other types of alternative data that could provide that type of macro economic signals, and the job market is certainly up there in terms of one of the leading indicators of what's going on in and around the economy. And with Reed's background in employment, working for the Bureau of Labor Statistics, it was a very engaged discussion all the way around the table from early on. So we started talking to them, and I think there was a lot of mutual interest there, and we agreed that it was something that we very much wanted to pursue. So we started looking at the data itself, and the internal teams, data science teams within S&P started analyzing it rigorously. And then we spent a year or so developing the methodology itself, and then put it into operations and rolled it out a number of years ago.
Awesome. Thanks, Toby. I think maybe I'll direct this at Zach or Reed. And we sort of touched on this in the beginning, and Toby just touched on it just now, but if you could elaborate on what other indices or other economic indicators that you would equate this index to, and with that in mind, like, how do you see this being most valuable as an economic indicator?
Yeah, I can jump in and speak a little bit about that. If you go onto S&P Dow Jones Indices website, you'll see a new category that we created that we call indicators. So, this is a whole new kind of burgeoning, growing area for us. We have indices that, focus on things like consumer credit. We've already mentioned the home price indices several times. I'd say, there's also conventional indices that are used in many different ways, used as benchmarks, used as underlying for passive portfolios, but one of their chief uses is as indicators. So even the S&P 500 itself is a major indicator. Also, indices like VIX, the volatility index that we have in partnership with the Chicago Board Options Exchange, SIBO. These are first and foremost what I would call indicators. And so the S&P 500 LinkUp Jobs Index is right in there in the mix in terms of what it's looking to accomplish. And it can be used in sector rotation strategies, because we have, of course, sectors coming out of the S&P 500 Jobs Index. It could be used in other ways, reweighting companies within the S&P 500 based upon jobs momentum, so to speak. These are things that we would expect to be working on in the future, and we would expect clients to be using the data, for these purposes. So yes, it adds to a rich stable of indices that we have already. We feel like this is a great index to complement those.
Awesome, thank you. Toby alluded to this, but I know the process of getting a new index created with S&P Dow Jones is quite rigorous. So I think the audience would be curious to hear more about what went into that process, and what was LinkUp's role in completing this index. And I'll open that to all of you.
Reed, you want to touch on that, and
Sure.
I can jump in, or you want to?
Yeah, as Nicole said, we definitely don't launch indices lightly. There's a very rigorous process that we undertake where we're looking at the data, how robust the gathering process is, whether the data can be reliably produced week after week, month after month, year after year. I would also say that, as a S&P Dow Jones Indices, given kind of our place in the market, we definitely want partners of high caliber. And so, we worked very closely with LinkUp to understand the nature of their business, how they run their business, and of course, LinkUp passed with flying colors. So, we really felt that this was a partnership where there was unique value coming from both sides. We then, of course, undertook an R&D process to get really into the data and make sure that it was conducive to creating a compelling index. And yeah, this is not something that went quickly. This is something that, we wanted to really make sure we had a very focused effort on both sides, and that there was, going to be an index that would not just be valid and interesting for a few years, but for decades and the century to come. So yes, a very rigorous process.
I remember one time, I'll never forget it, Reed. I think we sort of laughed about it since, but early on in the process, it was maybe a year into it. You said one time we were in a meeting and you said the blessing, you have a blessing and a curse of working with us in the S&P 500. Obviously, the blessing is that it is really the most widely known and index in the world. But the curse is that, as you said, the rigor that was applied to developing this index and the due diligence on us and the data and the quality and the methodology there was extensive. And I think, again, it's been fascinating for us. And obviously, we've climbed a very steep learning curve on indices and some of the processes and methodologies that really are the backbone of S&P. And it's really been just a fantastic partnership. And I think, certainly we bring that expertise from a job standpoint in the data, and it's been a fantastic partnership. But I think early on, again, I would say, really to S&P's credit, to recognize the power of alternative data very early on in certainly sort of the earliest stages of the industry itself. And I think that's really a testament to the foresight and innovation that is part of S&P. So it's really been just a fantastic partnership since, and it's certainly something we're very proud of. And I think, across the alternative data industry, this index really does sort of set, it's really quite unique and sets a very high bar, I think, for these kinds of partnerships that are really compelling going forward.
Toby, maybe you can take this next one as well, and others feel free to chime in. And Zach mentioned some of these already. It's updated weekly. I think, if I'm not mistaken, this was the first weekly S&P index, but what would you consider some other key benefits of this index?
Yeah, I think it is, as we've talked about. I think there really are a lot of benefits. This fits in really, again, overall to sort of the power of alternative data in general in and around investment strategies. So again, I think this is very consistent with what we've seen in the traction and adoption of alternative data in across our clients. I think looking forward, there are a lot of paths that this can start to take. I think above and beyond this core index and the sectors, you can start to look at some other use cases around, whether it's ESG and signals there, some real estate, the correlations between our data and what we're seeing in the Case-Shiller index and real estate. So there are really a lot of different kinds of use cases. I would say almost the same thing that Reed said to us about the blessing and a curse. I think the blessing and the curse of our data set is that it really is an expansive data set that provides a lot of use cases, which is really exciting, but there's a lot there. And so it's not an easy answer to sit sort of as we think about what might come from this and the kinds of things we're working on. It's a very wide range of use cases around the data.
Absolutely.
And if I could just add, I agree with everything Toby has said. I would say one really unique element of this, and just to underscore something that's already been said, is that it is tied to the S&P 500, which has at last count $13 trillion benchmarked against it. And so we would hope that the expansive set of users of the S&P 500 itself, focused on the equities, would find this information helpful in managing their exposure to U.S. equities through the S&P 500. That this would provide great information to them. Toby alluded to my days at the Bureau of Labor Statistics. I just happened to be coming out of college. I spent a couple of years in the area of the Bureau of Labor Statistics that produce the non-farm payrolls each month. And it was there that I really gained a conviction to how important this type of data is to investors. We received calls every month from every major bank, from various asset managers, very interested in learning about the new number, coming to the market. And as LinkUp came to S&P Dow Jones Indices, that really came back from my memory that just how crucial investors see labor-related information in their investing decisions, and tying that to the S&P 500, which is the most popular index for investing, not just for the US, but the whole world. We think is powerful in creating a unique value proposition that we think is going to be compelling to the market.
That is a perfect segue into the next question that we have, and I will open this one up to the floor. What investors have an appetite for this type of index? Who is the target audience?
I can jump in, piggyback a little bit. I think Reed covered it. It really, given the size and popularity of the S&P 500, I think there is a wide range of investment strategies around this. I think, again, it very much mirrors our use cases with our clients in and around the capital markets. So we have a wide range of investment strategies that our clients are using with our data. It's multiple asset classes and equities and credit. There is event driven. There's all kinds of different strategies around this. Again, I think it's signals are both positive and sort of on the upside and growth and performance, and also on the downside in terms of companies that are having challenges in their businesses. So I think all of that plays into and is very applicable to this index itself. And again, given the market caps of the constituents in the S&P 500, I think this lends itself to just a very, very broad range of investment strategies that you'd see pretty much throughout the capital markets.
And I'll just add, I think we were very glad to have sector indices when we launched these, and that there is a massive audience for of sector investors. Our select sector indices that we offer are among the top indices in terms of assets tracking them, trading activity around them. And this is, to the degree that an investor is trying to really have their portfolio optimized for a certain market conditions and using sectors to implement that strategy. They could look to the individual S&P 500 LinkUp Jobs sector indices as very informational, very helpful in building those strategies. So that's a particular application that I'm excited about.
Thank you. I will open this one to the floor as well. And some of these we've already touched on: ESG, correlation to home prices. What other types of signals can be derived from this index? Could there be a layoff notification? Could there be some other growth signals that can be extracted?
Yes, definitely. I think those are a couple of good examples. I think again, at an individual company level, there are a lot of underlying use cases in and around the data. So I think from a company standpoint, you hit on a couple there. Essentially, there are a wide range of what we call sort of job factors, different investment themes and strategies around specific kinds of things that you can discern in job openings, the job descriptions, the signals there, particular investments in technologies, all kinds of different use cases there at an individual company level. And then, as Reed said, you can roll that up into sector strategies and all the way up to macros. So again, I think there are a wide variety of strategies there and different kinds of things that, as we continue to work on our sort of internal product development and R&D and work with S&P, I think we expect that there will be additional components and related products emanating from this core index itself.
I'll add on here as well, as one of the great things about partnering with LinkUp and this alternative data source. It can be involved in many thematics that we already have launched. We're one of the leading providers of, we are the leading provider of thematic indices in the world. And what we could do here is look at jobs data and basically combine it with anything that we've launched. So ESG is becoming a very hot topic. If you want to see companies that are growing in that space and are actually putting the investment behind the human capital in that space, we could do a lot of things with this data to create unique thematic indices, not only with the ones that we have launched here, but if you want to create different strategies around certain sectors, or do you want to combine certain themes, we could do that with this data to see that forward-looking progress in those innovative areas, that you or we see fit.
Thank you all. We're about up on time, so I will cut it off there. Thanks to everyone for joining, and thank you for submitting questions. For any questions we didn't get to, we'll plan to follow up after this live webinar. Please feel free to reach out to any of us here today. Our contact info is shown on screen. If you have any questions about LinkUp, our data packages, the S&P 500 LinkUp Jobs Index, or any other topics. And be on the lookout for future webinars with other industry experts and partners of ours. This will be a quarterly series that we're going to start doing in addition to our other quarterly content, such as our economic indicator report. Thank you all and have a great rest of your day.